All right, sit down, tune in, turn on. It's time to get started here this morning. Welcome, everybody. It's TheoTrade chat. It's Don Kaufman here. On this October 9th, I'm still having problems with getting out the fact that it is absolutely October right now. S&Ps this morning are massively unchanged with absolutely no volume. So nothing has changed on that particular front. And the reason I'm bringing that up, when I say nothing has changed on that front, that's a lack of volume in the morning. There's no size trading in the overnight, and the markets are finally kind of keying into this. It doesn't have nothing matters in the overnight trade because the options marketplace is what's actually moving and kind of dictating trade on a day-to-day basis. That's also one of the reasons that in the last couple of trading sessions, what do you see in the last couple of trading sessions? Cruise over to the SPX for just a moment. What you see in the last couple of trading sessions, early bid, absolutely nothing. That's because retail option traders are coming out very early on when the bell goes off. They're buying calls and then they're just gone. I mean, completely gone. All of the movement yesterday was in a 90-minute window, and that was it. It's all pretty much it. Wrote up and completely flat for the remainder of the day. We did absolutely anemic volume, which is interesting because, last week we were seeing some pretty extreme levels of options trading. Yesterday, there was nothing. There was nothing in the S&P futures. Yesterday, we barely hit 1 million contracts in the S&P futures. There was light options volume as well. So we're coming into a cash open here. It's a total slop fest. Tesla's actually going to be down. Most of the other tech stocks are relatively flat. We'll see if a bid comes back into this marketplace. As I was saying, here is your slop fest. Well, there is one interesting thing. Yesterday, even though the markets were higher yesterday, the advanced decline line was decisively negative. Today, the advanced decline line is decisively positive, which is a negative for the markets. I'm going to think about that one for a second. Yes, because if the advanced decline line is positive, that would mean you're probably buying financials, buying the energy sector, and yet selling, individual AI-related stocks. And we are seeing maybe a little bit of tech being sold, not Nvidia. Nvidia does have a bid under it in early trade. Go Nvidia. Nevertheless, keep that in mind. And a positive advanced decline line is not necessarily a good thing for the S&Ps, as we've seen positive advanced decline lines indicating rotations away from some of the major tech stocks. Boy, that's it's getting weird out there. It's getting weird out there. By the way, the ticks nominal. They're scattered. They're broken. There's nothing going on over there. As I was saying, here we actually have the energy sector. The energy sector in early trade has a bid. That does not bode well for tech. The financials have a bid. Once again, are we going to see a rotation away? Well, it's from some of the tech. Tesla, isn't necessarily AI. I say isn't necessarily, nobody really knows where Tesla kind of lives. It's not a car manufacturer. We're through that one, right? Because if they make robots, they're kind of AI robots. I've seen a lot of movies before, and it starts with the robots. Really, it starts with a nut like Elon Musk, then the robots. All right, we're getting places now. Anyway, Tesla is being offered slightly lower. We're going to move away from stock in just a moment. I do want you guys to know that the expected move for today's trading session, again, the expected move for today's trading session is 36.04. So you have about a $36 expected move. Move right now, $9. The butterfly that we presently have on for Thursday's expiration, this one's by no means dead. I mean, it would have to be a considerable move to the downside, but we have neither hit the upper or lower edge of an expected move this week. This week has just been pop, a quick drop back to where we started, another pop. Right now, we're unchanged. I mean, you don't read into a 6-point move in a a $6,800 product. As you guys are well aware of, it only takes 2 minutes here or here for us to actually hit a butterfly. And on that front of the butterfly, the last one that we've hit was actually right here. Okay, we hit it on a Thursday. And the reason I'm bringing that one up, just at a quick glance. Okay, so we hit right here, decent return. That setup is no different, okay, than what we're looking at now, other than the fact that we hit, okay, the sell side activity hit midweek. Here we are late in the week, so do not discount the ability to move to the upper end or lower edge of the expected move. And quite frankly, like, I don't have a great feel right now on a day-to-day basis. No one does. Okay, other than to say, like, everybody right now is so hopped up on AI juice, they can't see straight. There's a very interesting graphic that came out. Even Bloomberg now, I'm actually showing you the graphic. Even Bloomberg now, which I don't often bring up different graphics, especially from Bloomberg. Not exactly a huge fan of Bloomberg, but the point that I wanted to make is, the circle of life trade. Okay, this is absolutely disgusting, and holy crap, this is way bigger than the risk in the financial crisis. I mean, by a magnitude of 10x. I'm not joking with that either. I'm going to remind people of, like, the financial crisis. Okay, during the financial crisis, right, in the depths of the financial crisis. By the way, yeah, somebody else said, I saw this graphic. It's good. It's like they did a great job of, like, kind of organically putting it together in here. But there was something that really struck me, and I was thinking about it yesterday. But then this graphic came out. Like, I only saw it this morning. For those of you that will recall, okay, in the depths of the financial crisis, Congress had to pass a bill, and that bill was under what they called TARP, the Troubled Asset Relief Program. Okay, so during TARP, right, the first bill that passed was basically $900 billion. So they're going to inject $900 billion into the financial system, be like, baby, breathe, 900 billion. That one worked. Only a few weeks later, they had to do it again. So it was somewhere in the neighborhood, let's call it $2 trillion. Then the Fed started actually injecting liquidity. You do realize, however, that we're talking, those numbers are peanuts in comparison to the risk in this graphic. Peanuts. Okay. I'm not saying Nvidia is going out of business, but would you agree with, could Nvidia lose, okay, $1 trillion of its value? Of course it could. It's at 4.5 trillion. It was $1 trillion of value was created. Microsoft, okay. If you lost $1 trillion here and $1 trillion here, you're already at $2 trillion of value. OpenAI at a $500 billion market cap, okay, is so embedded in here in different types of derivative type trades. There could be easily $5 trillion plus of risk just on this screen. And that wouldn't, okay, include, and I don't give a damn what you think about, like, well, this one lent money to here. And so Oracle, okay, Oracle, yeah, what happened here is Oracle got money from OpenAI, but it doesn't actually get the money yet. And then Oracle had to go out there and buy chips from Nvidia to build actually the server farm that doesn't even exist yet. And then XAI, which is, of course, Elon Musk. Elon Musk had to buy a bunch of crap from Nvidia to build their server farms, but Nvidia invested in XAI. That did happen. Okay, and we continue on from here. It's OpenAI, though, that's the most impressive, because I can't even figure out how many different deals they've actually done with the same $100 billion. Microsoft invests heavily in OpenAI. OpenAI then turns around and uses Nvidia, uses Oracle. Okay, it just goes on and on and on. It's insane. But here's the thing: if there's $5 trillion, okay, and by the way, 5 trillion is, it's just a wild guess. Okay, if there's $5 trillion of trade in here, that doesn't include all the derivatives effectively behind it. Okay, all the bets around it. Okay, and it's an absolutely alarming number that would come out of there. And I just remember the Troubled Asset Relief Program (TARP) and the first bill that passed for 900 billion, and everybody's like, oh my gosh. Okay, and then they had to pass another $900 billion. It's insane. Um, by the way, TARP, which is Troubled Asset Relief Program, which somebody rightfully called TURD, was run by Neil Kashkari. So Neil Kashkari, okay, was actually brought on by, he was a kid at Goldman Sachs that was kind of Henry Paulson's right hand man. Okay, Hank Paulson's Henry Paulson. I can't get the damn name right. Anyway, at the time, some wild things, but Neil Kashkari is Hank Hank Paulson. Yeah, Hank. All right, I'm getting it right. Anyway, Neil Kashkari, I would have always thought would be a front runner to actually run the Fed. Still relatively young. We'll see. We'll see actually. But Kashkari actually ran the whole TARP program, and he saved the world. Uh, Nevertheless, okay, I think you should expect something like, are they going to have like an AI relief program? We need AI because AI is going to be a necessity. There's no question about that, especially when it comes to national security. Okay, mark my words. Okay, AI in a very big way will be government owned at some point. They're not going to just let that bubble pop and those server farms just end up as waste out there. They're going to need that. Anyway, onward. A little bit of sell side activity, as I was saying, specific to a couple of the tech stocks this morning. Nvidia is the only one that really holds a true bid in the marketplace. Let's continue. By the way, the graphic is a mess. Okay, you know what? That graphic, I don't even think it does justice. I think it's way deeper than that. So in trades, they went back and they looked. I mean, it took years to figure it all out, but they went back and they actually looked at the financial crisis. And the financial crisis, so you had all the banks that were like collapsing, and it didn't matter, right? Because a bank at the time was only worth like $200 billion. It was like one of the biggest banks. So 200 billion, but there were literally, okay, derivative trades on derivative trades, which basically means types of option trades. And that's where we start getting into credit default swaps, which are derivative trades. Credit default swaps were just backstops of credit against, backstops, options, if you will, hedges, banks against other banks. So the credit default swaps was a big portion of it. Okay. And there were billions and billions of dollars of credit default swaps. And then all of the mortgages compiled together. Okay. With the derivative trades behind them, it's a few $1 trillion. In the end, the financial crisis really was a few $1 trillion, but it threatened the global financial system. Now, okay, the amount of capital in the system, like M1, is bigger. It's like ridiculously large. And obviously, we've gone through a bit of inflation, but this is a magnitude larger to which I ain't got a clue. All I can tell you is if you had $5 trillion of real risk, 5 trillion of real risk, I would have to say that if derivatives are traded, which they absolutely are in these products, okay, that your risk would actually have to be 10x. So if you don't believe the $5 trillion number, well, it's okay. That's okay if you don't believe the $5 trillion number. What do you believe? You believe like 2 trillion, okay? Because Microsoft could lose 2 trillion in market cap, and Nvidia could easily lose 2 trillion in market cap. Let's not even worry about OpenAI because they're not even a publicly, traded company. You lose 2 trillion of market cap. Okay, you have to put a 10x on that. You have to, because there's derivatives, and it could be more like 30x, meaning that like if you lose 2 trillion, you're really going to trigger almost $20 trillion somehow of losses. What's the somehow? Well, that's the derivative portion of it. So crap's getting real out there. And this is just one big, I call it the circle of life. Okay. That's the very politically correct way of saying that we are in a cluster. Beep. It's ugly out there. Let's continue on. But I just wanted to show the graphic because that's a pretty good job of it. I thought it did a pretty good job of it. I mean, no one's actually shown, who's invested in who. It's wild. Continuing on. There was a car parts. So Tricolor, which was actually that's like subprime loans to cars. That went up in flames like 3 weeks ago. There's another car parts company that went up in flames today. They actually are filing bankruptcy. So there is trouble ahead over there. All right. Onward though from that. So advanced decline line, as I said, it's going to be decisively positive. It's a negative, in fact, for some of the order flow, of course, of major tech stocks. There's an interesting little facet here. Kind of see it. There's a bid for Tesla puts traded at the ask or above. Okay, there's buyers of Tesla puts right now, and they're selling calls. Just interesting to see that kind of price action. So let's cut to the chase over here. As I was saying a moment ago, it's a $36 move. Actual move is nothing. Okay. Next thing on the docket, if you're been hiding under a rock, metals, okay, are in play. Specifically metals today, they're all over the place. It's not even so much gold. Today, okay, you got to talk about silver. You have to talk about silver. Holy crap, is this thing moving? All right. First of all, okay, the explosion to the upside, it's squeezing. There's no question that it's squeezing. Okay. Number two on this. Now the brokerage firms are going to change your margin requirement. People, if you are in a silver position, okay, if you're in a silver position, which I am presently not, okay, but if you're in a silver position and that silver position, okay, is in the futures market, they will dynamically shift your margin. Okay, that risk unequivocally is far too freaking high. And you can see inside of the silver contract right now, they're holding almost $20,000 of margin. Holy, that's a lot. So they're holding almost $20,000 of margin right now at Charles Schwab for a silver contract. Okay, and you can go check it out on a bunch of different trading applications in here. But different brokerage platforms are going to offer different margin requirements. Okay, so we'll look at the buying power effect here. The buying power effect on Tasty is still only 17,000. But I'm laughing right now because I can read through the tea leaves over here. I have a very close friend, okay, and he ran margin restrictions at Thinkorswim TD Ameritrade. And he went on, and he's actually still in the industry, okay, still running margin. But there's a great story behind this, going back to silver specifically, okay, from years past. We changed our margin requirement at Thinkorswim, which caused the Chicago Mercantile Exchange to change their margin requirement. Well, that guy, okay, he's still around. And if he changes margin requirement, which he has, okay, then the whole entire industry is going to change their margin requirement. One guy, okay, is just a geek. It's just a geek, and he actually was the. By the way, it's kind of comical because he's just a kid, but he has a really good feel for risk. Nevertheless, the silver is absolutely in play right now. This, okay, is the kind of chart you better watch out for. If you're going to trade in silver right now, might I suggest you move to SLV, okay, and only use its options. It is in the middle, okay, of an absolute like heave ho. It's a squeeze, okay. It's going to get wild inside of here. I just want to show you how wild it is. SLV, okay. SLV trades a couple of options here and there. Today is traded 300,000. 300,000. That's absolutely sick because I trade this product. We've traded this product again and again. We've actually caught most of the breakouts in here. Clearly, we didn't catch this breakout. Actually, ironically, we did catch the breakout. We just, it was a spread, whatever. But this is incredible size. That's not 10 times, okay? That's, if you looked 6 months ago, it was lucky to do 30,000 contracts all freaking day, okay? Jeff was asking, is it Clink or Guido? It's Guido, okay? So I'll tell the silver story here in just a moment. I've told the silver story before, but sure, what the hell? I'll tell the silver story. Okay, here's the silver story. Okay, it was back in this time frame right in here. Okay, right in here, specifically right near the highs. And I'll use SLV. Okay, so I'm in Chicago. Okay, and silver is exploding higher. And this kid comes over, okay, and interrupts a meeting. It's a pretty important meeting too. Um, and he interrupts the meeting, and he literally says to, at the time, Tom Sosnoff, "Hey, I'm about to change risk for silver." Okay, so we stop, blah, 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 stop the meeting. Okay, so we're all looking. He's like, he's going to change risk for silver. Okay, and by the way, at the time, Guido's still pretty young. This is 2011. This he's like still a kid. By the way, Guido's also like the younger brother. Like everybody at Thinkorswim knew everybody else in any regard. So this kid comes in, stops a meeting, and says, "I'm changing the risk in silver effective immediately." Okay, and he's going to walk back to his desk. He's literally going to click a button and change silver's margin requirement, and then warn all the clients that we changed the margin requirement. But we know, okay, we know that if he changes the margin requirement, okay, in the midst of a humongous squeeze higher, it looks exactly, by the way, if you change the margin requirements in the midst, check this out, of a humongous squeeze higher, what's that going to do to the marketplace? Okay, what's that going to do to the marketplace? So you change the margin requirement right in the middle of that. The moment you raise your margin requirement, let's say, for example, you move your margin requirement from 15 grand to 20 grand, you're going to force a lot of people out of positions. Okay, there's no, and that's, by the way, that's by design. That's like what it's supposed to do. It's going to make you think twice about your positions. So it's going to force people out of positions. But we knew, okay, that this kid Guido was like the end all be all. Like if we moved our margin requirement, we're pretty sure that the Chicago Mercantile Exchange, the CME, okay, was going to change theirs. So anyway, all of us looked at each other. We're like, short silver. There was a product back then. Okay, I think it was ZSL. So it was ZSL. There was a product back then called ZSL. Okay, here it is. And the ZSL, okay, we bought tons of it. And, right before he changed the margin requirement, it's not wrong, okay? It's the closest I've ever gotten to like any kind of like insider trading. We were like looking up the rule book later. We're like, is it wrong to trade knowing that you run a brokerage firm and you're going to change margin requirements? I don't really give a damn, but it was a really good day because he literally changed margin requirements and the marketplace in silver collapsed right after it because Chicago Mercantile Exchange, okay, literally an hour later changed their margin requirements for the entire thing. So I got that going for me. That's it's a fun silver story. Okay, it's the worst thing. It's the worst thing I ever did. All right, in this business. Anyway, in SLV, and it was done. Okay, literally like the day we actually hit the high in silver. And I should use the SI contract to show you, but we traded. And I say we. Okay, everybody at that office was pretty much in the trade, other than maybe Jeff Bierman. I don't think we were talking to him at that point. Okay. Yeah, Jeff, that was when you gave us the crappy trade. Okay. It was it was the gambling stock, Las Vegas Sands. That was it, baby. That was it. It was Jeff's Las Vegas Sands time. That was chicken bone territory for Jeff. So okay, silver got killed. It dropped massively after that. So yeah. And by the way, everybody on the desk is like, we're shorting silver. People are on phone calls, not even picking up the phone for clients at that point. Everybody short silver right now, right here. And it collapsed. I mean, it fully collapsed. It didn't collapse because of us. It collapsed because he changed the margin requirement. And then the CME group looked at him and goes, that kid Guido is really smart. We should do the same. They literally did that. We're like, wow, you just moved a market, a global market, okay? Because a kid in Chicago, and like legit, he was maybe 24 at the time, okay? I mean, it's 2011, 24 at the time. He started working there when he was 17 years old. All right, let's continue. Somebody was asking the SPX butterfly placed. Yes, we have an SPX butterfly. It wasn't placed that day. That was yesterday. We placed a butterfly like what, 2 days ago, or did we place the butterfly yesterday? Okay, that was 2 days ago. Yeah, no, the butterfly's on. So, but the butterfly, you don't even look at, you don't worry about until you're at the upper or lower edge of an expected move. I mean, you should hit, literally in those butterflies, okay? If you hit, uh, 1 in 5 of them, you're going to be just fine. Okay, just fine. Because some of them are only going to hit for 100, 150% return. Others will hit 5, 600. We had one earlier this year that was like an 800% return. So the butterflies are kind of, they're hot or not. It's just you're placing a trade where, you're paying 35 cents for something that could be worth. This is a $20 wide fly I have on here too. Okay. That's a $20 wide fly. That's a big boy fly. And I've got this actually in a couple of different accounts here too. So yeah, I need let's hit the butterfly. That would be nice. Okay. I've got literally I've got this. This is a 2 units in here, but I've got this trade on a couple places. I love the expected move butterflies because I've never ever had a lower probability shot hit as many times as that. You only have to hit a couple in an entire year, okay, for positive expected returns. All right. Even if when you hit a fly for like, I think the last one we hit, the one we hit on Thursday, 2 weeks ago was 145% return, 145% return on this one, which is it's pretty nominal, but it still pays for umpteen more butterflies. You just kind of keep perpetuating yourself. But the beginning of this year was absolutely phenomenal for butterflies. Kind of died out, but I didn't place a lot of butterflies every week. So we'll see. This one, by the way, this one's a mile away. It's a $94, just so you guys know, it's a $94 move from here to here. That's $94 or here to here. And right now, where are we on the week? I mean, this is like almost unchanged. You start the week at basically, I think this is 15, and right now we're trading 42. Okay. We've done nothing. It's like a 30-point move in the week. Absolutely nothing. You haven't even moved 1/3. Okay. You got 1/3, absolutely nothing. Yeah, the one we placed on Tuesday, it was on Tuesday. We sold off a little bit and the butterfly actually started jumping in price. It'll jump in price again today because there's some sell side activity in the marketplace. It's a little bit of Microsoft. Okay. I mean, look, at some point, I didn't place, by the way, the bearish butterfly because I was bearish. I placed the bearish butterfly because it's 1/3 the cost of the bullish butterfly. I don't really care. Like, people don't like it, don't place it. But I'm placing the bearish butterfly because it's 1/3 the price. Now, don't ever discount the ability to move to upper lower edges of expected move. Okay. The moment you do that, you're really going to kind of screw yourself. What's interesting today, and it is interesting, is that the NASDAQ is down, but Nvidia is actually up 2.5%. Look, okay, everybody right now is talking about AI bubble, the circle of life, AI bubble. It's not just us, it's everywhere. Everybody's talking about the bubble now. So we went from like, ooh, which asset am I going to buy? That was last week. This week, bubble talk. Okay. Next week, crash talk. All right. Talk is getting dirty out there. And I got to tell you, all right, you better have your game face on if this thing does start to really sell off. 12 points and a sell off. Okay. 120 points might scratch the surface. So when the move comes, it's going to be violent. Okay. And it's going to be unrelenting, the first move. But then we're going to rally right back up. And I'm going to remind each and every one of you of this. Okay. You could be as bearish as you want to be, but there's no easy path right now to the downside. You can be bearish to the point you're falling out of your seat. There's going to be no easy path to the downside. And what do I mean by that? Okay. When we start seeing sell side activity, it's going to be heavy. It's going to be fierce. We're going to rally right back up. And then we're going to take it lower and we're going to rally right back up. And they're going to make sure that it empties the pockets of every single retail trader, okay, that ever made any money in this marketplace in the last couple of years. As diabolical as that sounds, okay, that's how markets kind of evolve. This will be one of the more painful sell-offs. And I don't think people realize that. And then again, we took our own little, test of this the other day. when I talked about Nvidia going to 140. Everybody's like, oh, it'd still be a buyer at 140. Exactly. You would be. Okay. Except when we do trade 140 in a hurry, people will buy it. It will rally back up to 165 and then drop to 100. You got that going for you. Anyway, so I'm going to sit very quietly today, okay, and kind of watch a couple of positions. Um, excuse me. Baba. Let's talk about Baba for a second. If you have this trade on, we're doing well. Leave it the hell alone. Okay. It's in the money now. Now it's in the money. Baba starting to come apart a little bit. This is what we were planning for. Um, by the way, puts are not expensive. Use spreads. Okay. Puts are not expensive. Use spreads. Use spreads for everything. Okay. The only people that just buy a call or buy a put, at that point, you're just taking a shot. Like Gianni does that, and he's just taking a shot, and he lets you know. He's like, "Okay, here we go," and it's an all or none. He's buying options for like $20, like a $20 option. Over there puking in the corner. I'm like, "Don't do it. It makes me feel dirty." All right, continuing on. You there, Brandon?
I'm
Brandon's
here.
out.
Just
Yeah, all
clearing my
right.
throat out. No, I'm just
Yeah, no, I was going to see. We can get into it a little bit over here.
kidding.
I,
I
you know
like
what
that
though?
graphic, the whole circle, Nvidia at the middle. CoreWeave. I mean, they have $8 billion. They're investing in capex, right? And they're buying, and they have no cash, right? This company has
Well,
no business, and somebody's lending them $8 billion.
I didn't even go. I didn't even go there. The fact that, you know, what am I paying to use AI right now? I paid $20 a month. I still am. I'm
Yeah.
paying $20 a month to OpenAI, and that's the only thing that I ever pay for AI. They're not
Well,
getting me with advertising because they're not bringing any advertising dollars in. I
but
can't wait till
this
like AI is skewed as like you should use Meta, you should use OpenAI. Like all of them are the
Mhm.
circle. The circle's going to go and start advertising.
What's
It's going
funny
to
is
be
people are
weird.
saying, well, AI is going to be deflationary, right? I'm like, no, they're borrowing $1 trillion a year to invest in AI, and it's not producing anything at this stage, right? I'm like, so at the end of the day,
Well,
I mean, at this stage, AI is inflationary. I mean, look at their stock prices.
yes,
Again,
but when it all collapses, it will be deflationary. That one
right.
I
Well,
will
that's
give
the
you.
whole point. Where's the product, right? Where is the actual benefit of AI? Yes, if you're in content, I get it, man. This is huge. It's game changing. But nobody wants to spend money for content anyway, right? I'm like, they want to have one person doing all of it and want one AI. So, but guys, what is it really contributing to the bottom line economy? Nothing. It's generating a tremendous amount of debt, bad investment, at least at this stage. And yeah, when that debt implodes, go back to First Brands and it's bankruptcy. I'm
Can
like,
I
it looks kind of similar.
can I ask an interesting question over there? Yeah, the deflationary one when the mass firings are coming, but you have to understand the mass firings won't come, okay, until they have real reason to do so. Meaning that they already realize, for instance, like a lot of mortgage brokers and so forth could probably be replaced, and banks and lots of underwriters can be replaced. And it's financial services is going to get, stripped and decimated.
Healthcare.
But I know that side of the business in financial services would never want to fire somebody in an upswing, meaning that they wouldn't do it in this marketplace. They will use any excuse, though, of big sell side activity in finance, and then they're going to fire everybody and they're never getting hired back again. So you have to recognize that what's going to happen in this next, the next economic cycle, if you get laid off from a certain, job, or you're in a genre inside of like finance, you ain't never getting hired back to that. And that one, okay, stick a fork in you. You're done if you actually get laid off in finance because they're not going to hire you back. That's where AI will come in, but they can't fire you. Okay. When stocks like JP Morgan are at highs, it's not a good look for the stock, right? Why are they firing people? Well, AI is replacing. That story doesn't work. The stock sells off rapidly to 220. They lay off 20,000 people. That story works beautifully. And there's always a story with everything. And I'm relating it to finance because I know that side of the business from the executive like level where you're like, you don't do anything, okay, until, everything is stock price related. For those of you that do not know this, during the financial crisis, I was bringing it up earlier, but during the financial crisis, and Brandon was there, Thinkorswim grew by 100% in 2008. But our stock, okay, got cut basically in like, it was a $16 stock turned basically a $5 stock because of the financial crisis. The stock, though, like we were making money hand over fist at that point. We were killing it. And the market collapsed and took your stock down to $5. And we had to go around, fly around the country and fire tons of people. Like how many people, did I fire at that point? I don't know, 100, 150. Okay. I mean, it was bad.
Yeah.
It was bad. It was, that was, isn't that the year Up in the Air came out too? It was like right after that.
Yeah.
That was like the most depressing movie I ever saw because I was that guy with, it was myself and JJ flying around. It was bad. Bad
well,
year.
I mean, you kind of brought it up. Like, look, the market goes down, they step in. I mean, the reality is, I mean, will AI ever be deflationary? Yes, we lay people off, but we're going to lay them off into a correction, into a crisis. Well, what's the Fed going to do? They're going to go bail them out anyway. All this stuff that they've debt and all this capital, all this stuff that they've wasted. I say wasted on AI because what is the return on AI, right? Because if you can't get a return, it is a waste. And then all of a sudden we hit a downturn. They lay a bunch of people off, but the effects of the Fed going back to ZERP and bailing out all these companies' investments like we've done repeatedly in the past actually creates inflation. And so, yeah, we end up with a stagflationary environment where we have a weak jobs market, people unemployed, and then you have the bailout on the backside, just like we had in 2020. But I'll tell you, I two people I know, trucking and warehouse logistics got laid off. I mean, look, stuff's happening right now. This is like, the economic downturn is happening. The jobs market's softening. And so when do we start to realize what's happening on Main Street
man.
in Wall
the
Street?
Government shut down. It doesn't matter.
Yeah. Oh, no, it doesn't matter. Yeah.
What was the
We're getting stuff done.
I can't remember even the movie where it was like Newman. He's like, see, nobody cares. I can't even remember what movie that was, but Blake gave me that meme the other day. He was like, see, nobody cares. I can't remember. It was Newman, but he was in some other movie. But it's absolutely like dead accurate because no one gives a damn right now. No. Government shutdown. See, nobody cares. If you're a federal employee, you're concerned about getting your paycheck even after being furloughed. That's it, which is a lot of people, but that's it. A military, they're like, it's going to get tight out there. Nobody's talking though about like, again, the auto parts company that went bankrupt this morning. Tricolor was weird. Tricolor was, they were giving subprime loans to people that were in the country illegally. And that went belly up pretty quickly, but this is an auto parts company and they went up in flames and there were smart people, very smart people that were actually backing that, including of course, UBS.
But does it turn out they're smart? Because basically they say, hey, here's our receivables. Hey, let's get a loan on these receivables. Then they take those same receivables, go to another company. Hey, can I get a loan on these receivables? It's called rehypothecation, right? Everyone has the claim to the same asset. And all of a sudden, $1 billion evaporates overnight. Oh, we're out of business now. Where'd it go? I don't know. It's almost like it's like MF Global, right? I'm like MF Global. All of a sudden, boom, money's gone. Where'd it go? Account holders. Oh, sorry, you're out of luck.
We know that. By the way, it is Jurassic Park. It is Jurassic Park. Why could I not remember that? Okay. It's Newman. I know it was Newman. He gets eaten in that movie.
Oh, that's right. He is. Oh, yeah. I forgot about that.
When he was going to steal the thing with the little
right.
The can of shaving cream or whatever. It's like, see, nobody cares.
Yeah, then he like falls, like doesn't the thing like spit him in the face or something like that? It was like
Yeah, that movie was way better. Like some of the other Jurassic Parks, I couldn't even watch them. They were so bad. Like my kids can't understand. How many times are you gonna go back to
the same dinosaur? Is Blue the last one was the one that just came out was decent. I kind of enjoyed that one.
My kids can't understand why today's CGI sucks. They're like, it looks fake. When they looked at the original Star Wars, like 1970 Star Wars, they're like, this is special effects. Like you can't tell. Like this looks and feels real. It's raw. Like my 13-year-old is so into that. Like he'll actually get into like the cinematography of it. Whereas he watches like the newer ones. He's like, this is stupid. He's like, Jar Jar Binks walks away. It's not edgy enough. Yeah, they ruined it.
It's like Michael Jackson. I'm like, you listen to Michael Jackson today, he's still relevant, right? I'm like, kids still like him. It's like Star Wars, right? I have this, I don't know if do you ever know
that
Joseph
analogy,
Elliott?
Man? You're going down a bad road over here. Michael Jackson, like, I'm out. I'm out. Oh, I show him
Hey,
the Cosby Show.
I'm
I'm
not talking
out.
the later stuff. I'm talking like, bad. I'm like the original, like kind of stuff that really,
Early
um,
Cosby's, not like later Cosby's. When he
look, the Cosby sweater. The Cosby sweater's never gone. It's still a classic today.
That was a Coogee sweater from Australia.
Ooh, there we go.
I happen to know that because when I lived down in Australia, I'm like, man, there's these hideous like sweaters that everybody wears down
Uh-huh.
there. It's a company called Coogee. Okay. And I literally bought one as a joke. And I ended up giving it to my dad, and he's like, I love this thing. It
It's
was
like I was looking at like there's a brand called and Sons. It's a British brand, and they had a yearling sweater, it's like wool sweater, like cardigan. I was like, and they had an atoll. I'm like, dang, I want
but
that.
I
My
got to
wife's
tell
like,
you
you're not
something.
spending $200 for a sweater. It's like your Cybertruck, except for I don't have Don dollars.
No, I traded my wife's Defender for a Cybertruck, and I can't sleep in it right now because I also, to add insult to injury, decided to go get it wrapped because I can't look
Ooh,
at it because it literally looks like this is a
right,
stainless steel
stainless
cup.
steel. So are
So
you doing the whole like kind of mother of pearl wrap where it's like you get the
no,
different? What are you
no,
doing? Black?
almost like a charcoal color. Yeah,
Oh, okay,
no, I'm
because the
not. Yeah,
black
I
on black with the black matte wheels, I'm like, eh. But going charcoal, I'm all about the charcoal.
with a little bit of metallic flake in there. You know what the worst
There we
part of
go.
it was? I dragged her down to the place that was going to wrap it. By the way, it's by far and away the cheapest car I've ever wrapped. By
Uh-huh.
far and away the cheapest car ever because they're like, you don't even have to take it apart. You just slap the wrap on
It's all
there.
flat panels.
Oh, it was like next to nothing. It was like
Yeah,
next to nothing to wrap a
there we
Cybertruck.
go.
Like, there's another car. I had my Model S was slightly damaged. It got hit when I was up in Flagstaff, and they had to unwrap the car and rewrap it. Insurance covered it, but it was
Oh wow.
$9,000. And the insurance company covered it. And I was like, oh, you got to be kidding me. They had to unwrap the entire car and rewrap it. It was 9 grand. That was the best price I could actually find on it. And it was the
Yeah,
insurance company that found it. Anyway, this one, okay, it's not even a third that. Not even a third. It was like
yeah,
the wrap is like I think the wheels or the tires would cost more than to wrap a vehicle. So yeah, it's basically like, if you're gonna wrap like a giant dumpster, I don't
yeah.
care what it looks like. That thing is so much freaking fun. I'm driving it like the Jeep over grass already, parking
Uh-huh.
blocks. Don't worry about it. You go right over the parking blocks. Okay. You're driving a tank. You're
I
driving
know.
a tank. I do that with the kids in the car too. Like I took them to like the school parking lot, went over the parking blocks, over the grass. There's people yelling at me.
Yeah,
It's good.
I'm just glad like you're not going matte black on matte black because you see that and it's like, did you just like go through like a coal plant? I'm like, just got powdered all over. I'm just like,
It's
it
good.
just, but
And I'll
going
never
with a
wash
little
it.
metallic, you get a little
Yeah.
differentiation.
I'll never wash it. People that like it's like to me, it's a giant Jeep. It's an electric Jeep.
Yeah.
Okay. You can't wash a Jeep. The more mud that gets splashed up the sides, that means you've been doing stuff in it. Okay. I don't buy that thing for anything other than to be, a menace to society. And I did honestly, like I needed a really safe car. Because I go to Flagstaff and back almost once a week. And like the trip from here to Flagstaff, it's only 2 hours and 15 minutes, but it's one of the more dangerous drives. A lot of people, a lot of like accidents up there. So I wanted to drive like a tank
Mhm.
up and back, and that's how I sold it to my wife, and
Okay.
that's my story. And I'm sticking with it.
It's like the vacation mate. Did she buy it? No.
Exactly, exactly. And the answer
Did
is
mom
right
believe
now,
you? No, no.
no, no, no. My wife actually is,
Like
yeah,
Christy
she's.
Brinkley in the pool, and you're going back, and Rusty's like, did mom believe
No,
that story? No.
no, no. I was
They're
just helping
talking to
her.
you, son. No.
I was just helping her. All right. Sorry, I'm just reading over here. Anyway, let's examine the market one more time. Advanced decline line now has turned actually negative, which is interesting. So you have Meta, okay, and you have roughly Tesla. These are sorry, Tesla, Nvidia holding the whole marketplace together right now. Mind you, Nvidia is up almost 3% with the Nasdaq down. It's dangerous because if Nvidia starts to see a degree of sell side activity, you're going to get the Nasdaq actually it'll be down at 150. So if, for instance, Nvidia goes flat on the day, it's really going to accelerate the sell side in this marketplace. And might I suggest something, okay, that the order flow right now, okay, because I actually have this up on another screen, but the order flow in here, okay, it's still positive. There's still call buying going on, but
Yeah.
it's marginal. It is marginal. The puts are actually fairly active in here as well. You're trading really heavy volume, though, really heavy volume at this point in the day. So kind of keep your head in the game. Things have definitely flipped over to some degree in Netflix. Apparently
If you look at
nobody
that
is.
puts call ratio, Don, on Nvidia, I
Yeah,
mean, the puts call ratio, we're saying 2 times the calls versus the puts. And yet, if you look at the NASDAQ, it's trading probably 1.5 times more puts than calls.
uh,
We're going to talk a bit about that today. We're going to talk dispersion a little bit.
yeah. So I'm actually going to be back on with Tony Rago. I'll be back on at 11 a.m. Pacific, 2 p.m. Eastern. I'm actually going to be with Tony for a good hour, hour and a half, discussing. You guys will find this one really interesting. Okay, so we put Tony to the test, and we're actually going to show you literally we put Tony into a test with the golden setup. I think you guys are really going to enjoy what we have to show you a little bit later. S&Ps right now just leaning a little bit to the downside. I'm not reading too deeply into it. The one thing though, Brandon, order flow has actually picked up a little bit, doing almost 4,000 contracts a minute. Sir, it's all yours. I got to hop off.
All right.
I'm in week four of the shadow clock, shadow monkeys. And we've actually decided we're going to do a week 5. So we're actually going to make it 5 weeks. I couldn't get done in 4 weeks. I need all 5. Okay. Fusion Thursday.
It's the kitchen sink, Don. We're just throwing everything in. It's the mosaic. We're putting the pieces together.
Kind of like having you on after me. It's interesting. I don't get to talk to you too often here. So I would stay on, but I literally have to.
Did you like my vacation and Christy Brinkley reference? I mean,
I knew exactly what you were talking about. I knew exactly what you were talking about. I'm like, I'm not going down that road.
Against my face over here, and
yeah, don't take me down that road, man. I'm already in enough trouble over. So I actually, and she literally says to my wife, turns to me and says to me, she's like, "Is our daughter supposed to drive?" And I'm like, "I'll get a Model Y." She's like,
I'm going to show you, Don. I'm going to show you my cyber. I like your color scheme. This is my cyber truck right here, 2003 Lambo Discovery. It's got the charcoal gray with the black matte wheels.
It's a little darker than that one. I'll take a picture. I think I get it back on Friday. I think they're going to give it back on Friday. It's supposed to pour rain here though for like 4 or 5 days. So I'm actually going to go back up to the mountains this week. I just hope it doesn't snow. It can get that crazy that quickly. Imagine that snow in October.
Yeah, I know. Well, we had a little snow. Like I went to go see the leaves on Sunday. That's the pictures from, and we went up the mountains, went a Skyline Drive, and luckily the snow had melted, and there were some hunters up there and stuff. But I thought, hey, I'm going to go down this area, and we go up this big hill. And it was pretty long too. We got out, started to slip a little bit. 3 amigos came on, so my traction control is gone. I'm fixing that next. But I got up to the very top to get up on top of the road. Soft shoulder. So it's all sand and gravel. And I start to slide back, and my car's turning to the side. Luckily, there's no drop off, so I just backed down over the over the bushes and little trees and got back onto it. But
I've tried to limit the stupid things that I do. These days, there's a long story behind that, but that also involves my wife. So I'm limiting the stupid things that I do.
Now with a Cybertruck, you can drive through Baltimore, Washington D.C., Long Beach. I mean, you can go anywhere with that. It's bulletproof.
Take some shots there. Yeah.
That's right. I'll test it out.
They're using much higher caliber, specifically like in Baltimore, like much higher caliber than the car can
visit
probably
Brett
stand.
And Nick and those guys. Not Nick, but
Baltimore. Anyway. Yeah, no, I don't. They intentionally. Garrett just bought a place outside of Baltimore intentionally. Okay. Yeah. I don't get it. I don't care if you're like 3rd or 4th generation. It's okay. You know,
the baseball card scene must be pretty good there. So I'm like,
my family comes from Queens. I'm not living in freaking Queens. I'm just letting that be known. I'm not offending anybody that lives in Queens, but I'm also not living there. You know? Yeah. You know, I got to take actually my kids sometime have never been to like Queens. Sorry, I'm thinking of coming to America. He's like, oh, this place is a real beep. All right, I got to hop off. I'll catch you guys later. It's all yours.
We'll see you. There's a band called Baltimoria. Anyway, Fusion Thursday. We're talking volatility today, folks. VIX, VX,